smokers, that ain't no dang jokers. Look at this. Tesla down over 5% here today. AMD down over 4%. Broadcom down 4%. Snowflake down 3.5%. Palo Alto Networks down 3.5%. Netflix down about 3.5%. Nvidia down 3%. You look at that and you're like, it must have been a really nasty day for the indexes based upon how many of these big companies were doing bad, right? Well, you look a little deeper and you see the Dow Jones was up 400 points today. 400 points with that sort of damage in those big dogs? What is going on out here? The Russell 2000, folks, was up over a percentage point here today. Don't judge a book by its cover, huh? Unbelievable to see that sort of damage, and yet the stock market index is doing something like that, right? Meanwhile, retail investors are getting rich AF. My wife took like 2 or 3 weeks off of like sending, the 6 and 7 figure awards to private stock group members. And it was ridiculous. I had to sign up 30 six-figure trophies last night, and 6 people hit 7 figures. And that's just in the last couple of weeks here, which, sometimes I see that and I start to get a little scared. I'm like, this is a lot of success, but I'm like, maybe it's too much success, right? I start getting a little freaked out. And that was the after picture there after I signed everything up, man. Epic. And this is my front door here, just trophies stacked up. These ones I think are going out tomorrow. The USPS man picked up a ton today. If you've never seen those trophies, by the way, this is what those guys look like, the 7-figure award and the 6-figure diamond award. Those are heavy beasts. So in this video here today, I want to talk about 2 core subjects, okay? One, we have new stocks that are ready to move, and they're moving huge. These stocks were stuck in the mud, and they have just begun their first inning move here, essentially. And so I'm going to show you those stocks, talk about those, what's going on there, those sorts of things. Second subject I'm going to get into in this video here today that I think is very important is retail investors. Me, you, everybody watching, right? Are we getting set up for our hearts to be broken? You see all this success, man, people hitting new milestones, and we start saying, dang, can we trust it? I don't know, man. It seems like there's too much good stuff going on, right? In regards to people making money and those sorts of things. So we'll talk about that subject in this video here today. I think it's very important to address that. Are we being set up into a situation like, last time I was really sending this sort of level of awards? I'm going to be completely honest with you guys. The last time I was sending this insane of a level of 6-figure and 7-figure awards, do you know when it was? It was the second half of 2020 into the first half of 2021. And what do we know happened right after that? We know 2022 came along and smacked people hard, right? And so I think it's an important subject to talk about. Are we being set up, or is the coast clear and we're looking good for quite a while now at this point in time? Okay, folks, appreciate you joining me. As always, one thing only I need from you guys, and that's for you to smash that like button. I hope you can do that for me, guys. I'll try to always bring you the best content, the most interesting content out there, talking about important subjects that I think sometimes are on people's minds, important stocks, all that good stuff. So all I need for you to smash that like. If you want to be subscribed here to the channel and you haven't subscribed yet, you can go ahead and hit that subscribe button. We are only a couple days away from the big 4th of July sale we're having on 1000xstocks.com. If you do not know everything that's included in 1000xstocks.com, click the pinned comment down there. There's a video I recorded. It's about a 5-minute long video that goes all in depth on everything you get access to. I'm sure a lot of you guys already know all the stuff you get access to, but for the people that don't know, watch that video there if you don't already know. And what you're going to want to do is enter in your name, email. A lot of you guys should enter in your phone number as well. It's up to you if you just want to enter in your email. But I'm telling you, the deal's on 4th of July. I already know I got family coming in town on 4th of July. You think I'm going to be checking my emails on 4th of July? I don't think there's a very high probability of that, right? I'm going to be worrying about barbecuing, pool parties, all that good stuff. But I always check text messages, right? So if you want to make sure you can get access to that sale, enter in your phone number. We can text over the deal as well. It's up to you. Do whatever you want. But I'm sure there's going to be a lot of people that are going to wake up Monday morning, all of a sudden worried about making money again, and they're going to realize, oh, I missed the 1000x sale. It's in my inbox, but now the link doesn't work anymore. Like, oh my gosh, right? You should enter in your number so you would have received the deal via text in regards to that, okay? Alrighty, guys. So let's talk about some stocks that have been stuck in the mud. They're ready to move, right? And they're not these stocks that have actually been performing very, very well. We have some stocks here in my own portfolio that are just tearing it up right now, even with all that damage that was out there today in a lot of those, let's call it more popular, more owned stocks. I'm looking at Nike up another 3.3% here today. I'm looking at Estee Lauder up another 5.3% here today. I'm looking at Revolve stock RVLV up another 6 percentage points here today. I'm looking at Wynn stock move almost 9% today. Almost a 9 percentage point up move for Wynn. Are these the most popular stocks in the market? Absolutely not. This is no Palantir. This is no Tesla, right? This is no, Microsoft, Amazon. These are not stocks that are talked about that heavily, but man, are they moving. Look at Nike stock the past month. It's up 22% in the past month. That's multi-years of index gains, right? Usually you would figure to make about 8% a year roughly in an S&P 500 index fund. That's what they'll always tell you, right? Nike's made 22% in the past month. What a move. Look at Estee Lauder taking it to a whole nother level. Estee Lauder's up 27.7% in the past month, dwarfing the gains that the S&P 500 has provided and the NASDAQ and the Dow and Russell and all the other indexes, right? Look at Wynn Resorts. Winning Resorts is up. I can finally call it Winning Resorts again, by the way. It's been a while. Is up 12+% in the past 5 days. This has gone up way more than what you would expect to make in the S&P 500 in a given year. And it's done that in 5 trading days. Unbelievable. But here's an important thing everybody watching this has to understand. Listen. You look at a stock like Nike, and it's made this huge move, right? We just looked at it. Massive move the past month. It's still down 2.7% the past year. This stock is still very early in regards to this move, like very, very early in regards to this move. You got to understand with turnaround plays, which is clear Nike has already bottomed now at this point in time and it's on its trajectory upward, right? The first 3 to 6 months coming out of a bottom when it comes to turnaround stocks, that's where the most insane money is made. It doesn't mean you can't make money in Nike stock in 2026 or 2027. It's just the insane gains. They always come in that first 3 to 6 months. I've been in the market now, 16, 17 years. And I can tell you time and time again, when it comes to these turnaround companies that have gone through a multi-year down cycle, and then they turn around, their business starts getting better and better, that first 3 to 6 months after the bottom is crazy in regards to gains. That's where the biggest upward moves are made. That's where the most money is made, okay? And so Nike, this stock's not even up in the past year. Just wait until all of a sudden it goes positive on a yearly basis and then starts blowing through 52-week highs, which a 52-week high is not very impressive for Nike. It's around $90, probably a little under $90, so don't be surprised if it breaks that. You look at a stock like Estee Lauder, look at this baby. It's down 21% the past year. 21%. So yeah, it's incredible. The stock's up 27+% in the past month, but it's still down 21% in the past year. This was still so early in regards to Estee Lauder moves. We haven't even seen all the great numbers start to pour in yet. The Estee Lauder numbers really start to get exciting at the end of this year and as you go into calendar year 2026. That's when the EL numbers start all of a sudden becoming like, oh wow, like EL's revenues going back up again. And then wait to see what happens with margins and profitability. You're going to see the earnings per share skyrocket for this company. When based upon all the cost-cutting measures the company's been doing this year and last year, once they start getting just a few percentage points of revenue growth, which you'll likely end up seeing by the end of this year, oh my gosh, just wait to see what happens to the earnings per share of this company. We're early, folks. Early in regards to these moves of these stocks. Remember, Estee Lauder just a few years ago was a $370 stock. $370, right? I posted this on my X page. If you don't follow me on X and you ever want to follow me on X, by the way, you can always do so. That's always linked in the description of all my videos, okay? But I posted this on X here today. I said, just hit a $75,000 gain on Cake, such a beautiful hidden gem stock. Not a lot of people own this stock. I've been talking about it religiously for the past year. Hit $64 here today. We're now up $75,000 on this stock. And that's just in the public account alone. And that does not even include dividend income. Remember, Cake pays me fatty dividends every 3 months. That's one of those beautiful things you don't get with a lot of just direct growth stocks. Cake's always paying me out all this dividend money in the public account, in the Patreon portfolio, in my private portfolios as well. I'm then able to take all that dividend money and go reinvest it maybe into more Cake shares, maybe into other stock opportunities I see. It's absolutely beautiful. And in regards to Cake, if anybody, hasn't been watching my videos for the past year, remember, Cake's a play on, one, they got an ATM machine business, which is the Cheesecake Factory, one of the most successful restaurant concepts in the history of the world, right, in terms of sit-down restaurants. But then they have North Italia and Flower Child doing national expansion all across the United States over this next 5 to 10 years, right? And you're going to likely up the amount of locations they're opening in a huge way. And then they got several other concepts that they're testing right now to see if those concepts are next up to be the next big concepts, like a North Italia and Flower Child, essentially. So Cake, how much more runway does this stock have? Here's a deal. If Cake comes in next quarter and shows another acceleration of growth rates, and then has a really strong guidance, and the Russell keeps rolling, Cake will be 75 before you know it. So, I understand the move's been very strong, but understand, Cake is still extremely undervalued on a forward PE basis. It's extremely undervalued based upon the next 10-year runway of growth this company has, which you can't say for many restaurant companies. Most restaurant companies don't have a 10-year growth pipeline ahead of them. Cake's one of the very few that actually has that. And so understand, I don't even, we haven't even seen close to the most exciting Cake numbers. And then wait till we get to next year in regards to Cake. Because next year, my guess is, this is my guess, they're going to up the amount of locations they're opening substantially. They already did, a bump up this year, but I think next year they start to really ramp up in terms of construction for North Italia and Flower Child. They got to get out there and make, and then 2027 will be another bump up in it, by the way. Now, in regards to Wynn had some huge news come out here today. Huge news. And that's why the stock was up 9%, that we'll get into in just a moment. But remember, they have the incredible Vegas properties, which those are the creme de la creme properties on the Las Vegas Strip, the Wynn and Encore. They have their two properties in the old part of Macau. They have the Boston property, which they operate, and then they have the Cotai Strip property in Macau, which is the Wynn Palace, incredible property. And then they have this Middle East property as well. Wynn caters to the top 10% of income earners, the top 10% of wealthy, okay? So, that's who they attract. They attract people that want to come and spend $1 million on a vacation. They want to attract people that are going to come with, a casino credit of $2 or $3 million. That's the type of people they're trying to attract to their properties, and that's who they attract to their properties, right? High net worth individuals, celebrities, all that type of stuff, right? Now, in regards to that Middle East property, which is just a ridiculous opportunity, probably the most exciting opportunity for any gaming company to have since Las Vegas Sands, LVS, opened up the Singapore property. The Marina Bay Sands in Singapore, incredible property over there. This is the most exciting opportunity I've seen since then, essentially, okay? Now, this picture you're looking at here, this is from a week ago, essentially, on the construction. You can see that tower about topping out there. It looks very impressive, right? Here's some more photos for you guys. This one's at night here of the property, right? This one's during the day here. And then this one's kind of a close-up from 2 weeks ago. So you can see it looks like the exterior construction should likely wrap up this year. Probably by the end of the year, they'll have all these windows done. The facade will be pretty much perfect, I would say, in terms of the exterior of the property at the end of this year. And then 2026 will just be fully focused on the company, just getting the inside, the interior of the property perfect. These projects are massive Wynn undertakes, and they do it right, man. They really do it right. And so 2027 looks like perfect year to open up this property, essentially, and it looks all perfect. Now, here's the deal. Huge news came out here today. If you're wondering how far does Wynn have to go, oh, baby, look at this. This is out of one of my favorite publication out of Asia, essentially, in regards to tracking how Macau's doing. So, Macau Casino, GGR, gross gaming revenue was up 19% in June. What? 19%? I thought the Chinese economy was doomed. I thought tariff this, tariff that. What's going on here? Oh my gosh, up 19%? That's one of the strongest numbers we've seen in a long time. Casino gross gaming revenue in Macau up 19% year over year in June. Oh my gosh, the June result was still, however, the second highest monthly tally since post-Rona. Second highest tally post-Rona. That's impressive. The June tally was an aggregate GGR that was up 4.4% higher than the prior year period. So the important thing to understand about this is it's showing that the business in Macau is strengthening, not weakening, but it's strengthening a lot even over recent trends. June's results meant that for the whole second quarter, casino GGR rose 8.3% year over year. 8.3% is very good, but the end of that quarter was up 19%. So things are strengthening, not like getting worse. Like, this is very, very exciting. Very, very exciting. Citigroup said in a note toward the end of the month that the June table survey conducted June 20th had indicated premium mass wager was 58% higher. That's insane. Now that's huge for Wynn. Why? Premium mass, think of that as like upper middle class folks, okay? That's what we're talking about there. So that's like that premium mass, and that's Wynn's cup of tea there. Wynn really focuses on that premium mass in Vegas. They also focus on that in Macau as well. And obviously they focus on like the VIP business, like, super high net worth individuals and whatnot, right? But it's not like everybody that like if you go in the Wynn Las Vegas, in Encore Las Vegas, it's not like everybody in there has a $25 million net worth, right? There's a lot of people that, make $250,000 a year that are walking around that place that maybe have, $1 million net worth. And that would be kind of considered more in that premium mass segment. So that's really big for Wynn overall. Now, additionally, I don't know if you guys got to watch the video I put out on the Reaction channel last night, right? Called Jeremy Lefebvre Makes Money, if you don't follow me on that channel. But in that video, I was talking about the Russell 2000. And I said, the Russell 2000 could easily roll into rate cuts. There's a pretty safe assumption now that the Fed will cut in September, okay? They could cut in July. They could cut after September, right? But there's a pretty, I think, safe assumption from both sides, the Hawks and the Doves at this point in time, that the Fed will cut in September. So you might think, okay, Fed cuts in September, that's when the Russell 2000 will start to move. Not necessarily. People always front run these things. And I was talking about that on the Reaction channel last night. People front run. So if people are like, you know what? And when I say people, I'm talking investors are like, you know what? Hedge fund managers, Fed's cutting in September. What are they going to do July and August? They're going to likely load up on the Russell going into that rate cut. If it was so easy as like you just wait for something to happen and then you react, the stock market would be a much easier place. But people front run things. That always happens. And so they become confident. Fed's cutting in September. We roll into the Russell, right? And so that's why you saw, even on a day today where the NASDAQ was down a good amount, and you saw that damage in many of those stocks, the Russell was like, damage? I don't know what's going on with y'all, but I'm up 1% today. That's the Russell doing the Russell thing, right? Now keep this in mind in regards to Russell Wilson. Oh my gosh. The Russell Wilson right now is around the same level or lower than it was in February of 2021. I'm recording this video in July of 2025. July of 2025, folks. And the Russell's the same price or lower than it was in February of 2021. That's insane. So just understand, the Russell has been a coiled spring for a minute. But everybody's wanting to be confident about the economy and that rates are going lower, right? And we've had a lot of concerns about the economy the past few years that have kind of held back the Russell, and also a lot of concerns about inflation and are the rates actually going lower. Well, as time's ticking on, you get more of that to dissipate. And so the Russell is a coiled spring. And look at the move it's made just since that April bottom there. I mean, that's up in a straight line. And so this baby's a coiled spring. Don't be surprised if the Russell continues to perform tremendous for a while, right? Jeez. Okay, next up here, let's talk about retail investors. Everybody watching this video right now, because as I spoke about earlier, it's a little freaky. I've been spending so many trophies, so many people hitting 6 figures, 7 figures in their portfolios. Start to wonder, it's got to be too good to be true, right? Well, here's the deal, okay? The last time this transpired, once again, was the second half of 2020 into the first half of 2021, right? Now, I got to see that crowd of investors. So what did we have at that particular time? I can tell you this. We had a lot of super noobs in the market. People that just got in, you got to understand, the economy, worldwide economy gets shut down February 2020. workers start being all sent home. People start having a lot of time on their hands. They start consuming more social media and media in general. And, everybody and their grandma's talking about Rona. This is, February 2020, March of 2020, right? Meanwhile, the stock market's having many of the worst days it's had in its history during that particular time. I mean, it was the fastest stock market crash we ever witnessed. The S&P went down, almost 35% in a matter of, weeks. We're not talking about, a year. We're not talking about many, many months. We're not talking about many quarters. No. In a matter of weeks, the S&P 500 dropped like 35%. It was ridiculous, right? So you attracted a lot of super noobs to the market. A lot of people bored at home, right? Because even a lot of workplaces didn't know how to operate their business at that time. So even people that, they didn't lose their job, they were just, not having to work as much. Let's just call it that, right? So they were like, let me check out this stock market thing, right? No, you had a lot of people that bought in that Rona crash that had money, because going into Rona, I would say the economy was pretty good. I would also say, the economy was pretty dang strong going into Rona. Like, if I would think about that economy, the end of 2019 and kind of go into the beginning of 2020, it felt good. I thought, it's going to be a good year. And so, a lot of people had a lot of money going into that, and then the Rona crash happened and they bought, right? They bought stocks as the market crashed. And they made crazy money really fast because that market bottomed around, March 23rd? And then it went up in a straight line. And so people are like, dang, that was awesome. We just made so much money so quickly. Actually, it reminds me a little bit of what happened this spring and into the last couple months, right? I mean, very, very close in regards to just a straight V-shaped recovery. Now, you attracted it then essentially as time went on there, a lot of degenerate activity because it morphed into from people just kind of being buy the dip. Oh my gosh, the stock market's crashing. I know every time the stock market crashes, buy stocks, right? And so that's what people did. But then it morphed into really degenerate activity, I would call it, right? GameStop, AMC, that took over completely what everybody was talking about by mid 2021, right? Clown stocks like that, they had no business being even talked about at all. Never mind the most popular stocks in the market, but that's what happened, right? Retail investors got super heavy into margin. They got super heavy into options, right? Just degenerate activity, and everybody was just caught up in this kind of euphoria. And because a lot of people made money really quickly after that Rona crash, essentially, right? Now you tack on stimulus money, you tack on PPP money, right? There was so much money being sloshed out at that particular time that people were just gambling that money. Because you got to understand, some people actually needed that stimulus money to cover bills or do whatever they had to do. Some people actually needed that PPP loan money that they were doing and all that stuff, right? And all the other programs they had. But a lot of people didn't. And you know what a lot of people did with that stimulus money, that PPP loan money and all that stuff? They went out and they bought luxury handbags with that money. You know what they did? They gambled it on crypto. You know what they did? They gambled it on sports. You know what they did? They gambled it on stocks and options and stocks like GameStop and AMC and all that stuff. And so that was the crowd we had at that particular time. Now that is a very, very different crowd than what we have right now that's making the big money, right? Many of the 2020, 2021 people that actually stuck around, because you got to understand a lot of that crowd essentially left in 2022 because they got obliterated. They already were getting obliterated on those GameStops and those AMC stocks and all those sorts of things and the options and the margin and all that. But by the end of 2022, a massive chunk of those people were gone from the stock market and they left forever, right? But there was a few from that batch, a few that actually made it through to the other side, right? And so we have some of those folks in the market now that made big money, right? That they made it through. They didn't get caught into too much of the degenerate activity that was going on at that time. Maybe they got hit on this and that. But at the end of the day, they made it through to the other side. And they understood the game and they're like, okay, I'm staying with this long term. You got a lot of people that have gotten into the market 2023, 2024 with the AI excitement, right? The AI excitement's been talked about everywhere for really the past, I would say, 3 years now at this point in time, right? 2.5 years. And it attracted a lot of people to the market, no doubt, that are kind of focused on AI. A lot of tech people, right, that are really excited about this new wave of technology and want to also capitalize on it from an investment perspective. So we got some of those folks, right? You have a lot of people really focused on actual legit companies, right, that are growing their revenues, growing their margins. The focus is not on stocks like GameStop that had a horrible business model that was in massive decline, or AMC that was a horrible business model in massive decline, right? Like a lot of the most popular stocks are actually really legit companies with growing revenues and margins. Is there some stuff out there that people are getting a little crazy with like quantum computing and this and that and what this next? There's some of that, but I wouldn't say that's made it like big yet. Like there always is a potential that could morph into that, but it's not really like that right now. And at least even some of those companies, they still have exciting long-term trajectories in terms of what they could potentially do, right? GameStop and AMC and all those other ridiculous stocks that people were tied into in that particular time were not that, right? Now, additionally, you got people that are in this market, they're really focused on building portfolios and playing this game for the next 10 to 30 years, right? That's what I'm finding time and time again. This batch back here, they didn't care about the next 10 years. They didn't care about the next 30 years. The majority of this batch was just a degenerate gambling activity crowd. Degenerate, like they're just worried about how much money they make that particular day or what they try to make that. There was a whole casino gambling mentality. A lot of the folks in this market are focused on building up a great portfolio that's going to last in many years. And it's just a very different mentality than, trying to go all in this stock and all out that stock, and I'm going all in options this week and margin and out and all that stuff, right? And this group really understands they need tools to help them to achieve what they're trying to achieve, right? And I can see this perfectly even by what's going on right now, right? Because, the 1000X sale we're about to have, I've already seen the interest for that sale. It's insane, like absolutely insane. No one would have cared about this sale from that 2020, 2021 bunch. If 1000X existed back then and I did a sale on it, people wouldn't care. You know why? Because people are like, why do I need to listen to an earnings call? Why do I need to run projections on a stock? Why do I need to look at a PE ratio or a forward P or compare companies or all the stuff you do on 1000X? Oh, wow. You think I'm going to look at charts of financials? I'm not doing that. Dude, that group, nah. They were not into that. They were into gambling mentality. They were not into fundamentals and trying to like research companies and like I'm gonna run projections on where this stock should go over the next 5 years based upon what I think their net income is going to go to, their revenue is going to go to, the P ratio. You think that group cared about that? No. All the education portion I have in 1000X. Oh, how to decode a balance sheet, how to understand income statement on high level cash flow. You think they cared about any of that? No, that group did not care about any of that, right? Like, no. How to value a growth stock? You think, come on, man. They're just like, what's the next hot one? What's the one that's moving today? Oh, it's up 5%. Maybe it'll go up 10%. Let's put money in this one. Like it was just, that was a very different bunch back then. So I'm seeing, although the level of success is similar in terms of people hitting new milestones, what I'm seeing in the real world from my perspective as somebody that runs a huge YouTube channel and, has big Twitter and, X and, Instagram and all that stuff, from what I'm seeing, it's a very different crowd, very different mentalities. This is not the same bunch, right? And so I'll say it's very much more healthy this time around, right? Now, there are some stocks that kind of worry me a bit for 2026, right? Some of those stocks like Palantir, Tesla, HIM, stocks like that, those worry me a little bit for next year because I do worry with the Palantir. They've been showing such insane growth rates. They should continue to for the... Oh, my gosh. Oh, my goodness. Oh, I had a chip down, a chip like right there all of a sudden. I was eating some chips before this. Rule number 1 before you record 30+ minute YouTube videos, don't eat chips. That was my own rule, and I think I broke it, okay? But Palantir, for instance. Okay, so Palantir worries me a little bit for next year. Here's why. Obviously, we know the valuation's insane. Now, the valuation can remain insane as long as you have these insane growth rates, right? The problem for Palantir is they're going to start to hit really tough comps next year. Really tough, because all these insane growth rates they're putting up this year, and they'll continue to through the end of the year, they're going to have to start comping all those numbers. And so I worry that Palantir will start to show a deceleration of growth rates, and that's going to throw a lot of cold water on that stock. So I worry about that. Tesla, so much excitement around robotaxi. People are going to realize what I've been talking about in regards to that. It's not going to be meaningful for Tesla's numbers for years. People are, in my opinion, going to likely come to the realization of that in 2026. That scares me a bit in regards to that stock, being that it's at ridiculous P ratios and those sorts of things. HIM scares me a little bit for next year, especially if that one continues to roll through the end of this year, which if the Russell rolls, I wouldn't be surprised, because that one I worry about a deceleration of growth rates as well. So there's some stocks that I'm a little concerned with, right? Not like I'm ready to buy puts on those stocks yet, but let's say those stocks rolled into the next few months. And when I mean rolled, I mean like went on a ripper rally. Shoot, would I then be interested in some puts? Potentially at that point in time, right? Not quite yet though. No, additionally here, if we look at forward P ratios, this is from Yarn-Denny Research. I love forward P ratios. It matters so much more to me than trailing 12-month P ratios, right? I want to know about the future, not about the past. Now, here's the deal when we look at this, okay, out of Yarn-Denny. The stock market's driven by the Mag 7. We all know that. It's the biggest weights in the S&P 500, the NASDAQ, the whole show, right? Now, we're not high yet in regards to the Magnificent 7 forward P ratios. It's about 28, which is, certainly way above the market, but those stocks are insane. Like, look at Meta, right? Look at Meta's growth rates. Look at the earnings per share growth. Look at the revenue growth. Look at Amazon. Do the same thing. Look at NVIDIA. You go through those companies. Google, which stock never gets respect, look at even that company's revenue growth, earnings per share growth. Like those companies are special. Apple's might be the most special of them all, just from the perspective of they have nothing exciting going on in that business model right now. Zero exciting things. And they still find ways to grow that earnings per share substantially. It's crazy. I'm like, how do they do it? It's magic. So, by the way, share buybacks matter a lot. So, Mag 7, I can't really call it high. If Mag 7s continue to roll, next thing you know, you see Meta hit $1,000, $900, somewhere around there. You see Amazon run 250 to 300. You see Google McDougal go well over 200. You see Apple go to all-time highs. If you see that over the next few months, then we'll start to get pretty high in regards to these, forward P ratios for the Mag 7. But I can't call them high yet. Now, additionally, you look at S&P 500 mid cap. Mid cap's not trading high. It's 15.9 right now, forward P. S&P 600 small cap, 15.1. So I can make a very strong argument that mid caps and small caps are trading cheap right now. Are they the cheapest they've ever been? No. Are they pretty dang cheap? Yes. A 15 for mid caps and a 15 for small caps, that's pretty cheap, folks. And so that's low in regards to those ones. So, if you think you got some sort of valuation, like end of the world situation here, you don't really have it. You just have some that are a little high, right? But heck, if these companies in the Mag 7 keep putting up double-digit earnings per share growth, then a 28 is not crazy at all. Like, if someday that breaks, then it might be a different situation. Now, my guess is at some point in 2026 or 2027, we're going to hit hard, right? We'll get a big bear market. When I say big bear market, I'm talking about a bear market that lasts 6 to 18 months, right? That'll happen at some point in time. But, that's just a guess at this point in time. We need something to break, right? In 2022, we had it. We had massive out-of-control inflation. We had a Federal Reserve that was raising rates rapidly. And so in 2022, we had the recipe for a massive, obviously down move in the market. A great financial crisis we had a huge housing bubble with just pure speculation, right? And we had a major unemployment cycle go through at that particular time. And so you had the recipe for a major crash there. In the Rona, obviously you had the recipe for a major crash there, right? We're going to shut down the worldwide economy for potential years. Yeah, that sets up for a major crash. So what gets us there in 2026, 2027? We got to wait to see how things develop here, right? And then once we see how things develop, maybe we can put our finger on it and be like, this thing is going to happen. But here's the issue. People like to try to wait till these crashes happen, right? The next big bear market. Here's the deal, okay? People have been waiting for the next big bear market since the last bear market. Like a lot of these Wall Streeters refused to invest at all really in 2023 because they were of this thought process still of like, we're going to go lower. So then they wait. Then we finally get a kind of a new bearish market, in the spring of this year, right? And a lot of people refuse to buy that one too. A lot of these Wall Streeters. You know why? Because they thought it would go lower. Guess what? In that bear market, we didn't even go as low as the 2022 bear market. So you could have waited till the 2025 bear market happened, right? Where the NASDAQ went down almost 25% pretty quickly. You could have waited for that. Okay. Yeah. You still would have been buying at insanely higher prices than if you would have just bought in 2022. So you say, okay, I could buy stocks today or I could wait till the next big bear market. Well, let's say next big bear market, let's say it happens in 2027, right? Something happens, all the recipe goes right over the next year, and then eventually 2027 we get a big bear market, right? There's no telling where the stock market will be before that bear market happens, and you might be paying higher prices for stocks at that particular time than if you just bought now. It's very rare you get a crash so big that you get, stocks at lower than the previous bear market. It's very rare. Even, you could look at where you were buying stocks in the 2022 bear market, for instance, right? You would have been way better off still buying in 2020 bear market. Like what you had to pay in 2022 was substantially higher when it comes to indexes. This is all food for thought here, folks, and that's all things to consider, right? And so that's why I consistently buy in the market. I buy almost every single Friday. I'll be buying Thursday stocks. I'll be buying stocks on Thursday this week, right? So the market's closed on Friday. Jeez. No, I showed this image a lot, a few years ago here. It's called Jeremy Lefebvre's hotel, the Flapjack Flipper Resort, right? Build a portfolio you'll be proud of years from now. So important. So important. Staying diversified is your alpha long term. Growth, value, dividends, hedge, cash. GVD, what I preach over the past few years, I can tell you back in 2020, 2021, man, people were not focused on having a well-rounded portfolio of growth stocks, value stocks, dividend stocks. No. They're focused on what stock's going to hopefully go up today, right? Conference calls are non-negotiable. You got to listen to those babies. Know your stock's financials, know your stock's metrics, outwork and outsmart, buy the dip, and never trip. Keep those things always in mind, folks, and don't get caught up in all the other stuff, okay? Appreciate y'all joining me as always. Thanks so much for being here. If you're looking to take advantage of that 1,000X sale, you want to enter in the list to receive that deal on July 4th. Click the pin comment down there. Fill out your name, email. If you want to receive the deal via text as well, we can send it over via text, and you're not going to want to miss that one, okay, baby, because that's going to help you out tremendously. It's the software I use on a daily basis. Much love and have a great day.